Welcome back to Fin Talk with Anil. We are on our day 21 of 30 days, 30 financial topics. And a couple of days ago, we have kickstarted this all new series on its own, which is called a term insurance. So far, we have discussed on day one what is a term insurance. On day two, we have discussed different types of term insurance, when to invest, things to keep in mind while investing into a term insurance. I'm going to add the link above. Please check that out. So today we are going to discuss whether or not this so-called add-ons, be it like a waiver of premium, accidental death, etc., is it really worth it? Yeah, so let's go on and move ahead with our day. So, are the add-ons really worth it? So, the standard add-ons we usually see while taking a term insurance page is like a critical illness rider. So basically, a critical illness rider works as, a savior is not just on the case of death, but also there are many critical illnesses which can seriously cause you trouble or a stoppage in the process of your working. That could also make you loss or lose your payment, right? So this kind of important for you to check that out. So the critical illness rider typically offers a lump sum amount upon diagnosis of specified critical illnesses like a cancer or a heart disease or something like, yeah. So mind you, this is on uh, the sum is paid basing on the diagnosis, right? Not a basis on the treatment. Mind you, this is not a health insurance. So let us say if you are to let us if someone has to have a illness like a heart disease or a stroke or a cancer for say some, right? If you have add-on rider for like let us say 10 lakhs or 20 lakhs, the moment the first time you get diagnosed with such kind of a critical illness, you can go back to your term insurance provider and you say that, you know what, I have this report saying that I have been diagnosed with this critical illness. So the entire amount which was guaranteed would be given to you upfront, so you can not worry about this treatment and you can take care of that treatment. Yeah, so that is something to check that out. There are some other types of add-ons, basically like a accidental death benefit, which makes no sense because it's also a death benefit, but in case of accident, etc., provides an extra payout in case of and ideal for individuals with a high exposure to risky activities like let us say it, you are someone who rides the motorcycle very fast, you know yourself that it. So everything that excites you is, or everything that kills you is excites you, kind of a song. Yeah, so that is to check that out whether you think it is needed. So waiver of a premium, let us say uh, if you are someone like I mentioned before, if any of the critical illness kind of causes you the loss of ability to earn or ability to pay the premiums in the future, then you can opt up for this kind of thing where in something to happen to you, not the death, of course, a disability sort, then your premium for the rest of the term would be waived off, right? You will not get the lump sum assured amount also, but you don't have to pay the premium. Kind of it kind of backs you up till the tenure continues, right? So that being said, let's move ahead and check out whether or not this return of a premium, right? Worth it. So nowadays it has been advertised a lot saying that the return of premium, you don't have to lose anything. That's more like a marketing strategy, which also kind of makes sense for those who thinks that the money is just a waste on term insurance. So let us understand this uh, concept more clearly. So to understand this, Well, the return of a premium seems attractive because you get your money back if you survive the term, right? It generally comes with a higher premiums compared to the pure insurance evaluate its worth based on cost versus benefit or financial discipline, etc. So let us say without a return of premium, you would have to have pay 1,000 rupees for your term insurance a month. But then let us say if you are to go for a return of a premium concept, then you have to pay upfront extra, be it a 1,500, right? So if you are someone with a good discipline or a financial discipline, if you had to pre-assess that and keep those two businesses separate and take a term insurance for pure risk and then invest that 500 extra in a better returning fund, be it a mutual fund. Check my videos out, or create a good discipline on its own, then it kind of uh, gives you back more than what you have ever paid on your term insurance, right? So that is important. So to check a higher premium compared to the pure term insurance, yes, the term premium would be higher. Evaluate the cost and benefit. So you would be paying the cost more, but whether the benefit is worth, right? Is it really worth it? So suitable for this is kind of suitable for people who has a mechanism or suitable forced saving mechanism, like you have a hard time investing in a mutual fund or something, or you don't have that kind of discipline, then yeah, this would definitely kick you out or help you out in that. Yeah, so let's move on with our some conclusions over the term insurance is a very vital tool in a financial planning journey. It secures your family future, offers flexibility through various types of plans, and allows a customization with add-ons, right? So, however, carefully evaluating your financial needs or lifestyle and liabilities before choosing a plan is very important. Yeah, so remember, while riders and return of premium options can enhance your coverage, they should also align with your financial goals and budget as well. Yeah, so let that sink in, and with that, try to check out some uh, concepts like who should buy a term insurance. Yeah, so like I said, a term insurance for everyone, but then if you're someone who falls under this pretext, then you need to kind of have a definitely have a term insurance, right? So if you're someone who has a non-earning dependents, be it your non-earning spouse, or be it your minor children who are still studying or something, or be it your old parents who are kind of dependent on you, something. So it kind of makes sense, right? In my case, I took a term insurance because I bought a house. Until then, I'm not obligated to provide a lot because my parents kind of have what they need to have for their life. It's not gonna make a difference of me or they're not there for at least I believed so. And then, but then when I took a home, I kind of leaving a liability over them for the EMI, and I wouldn't want them to go back to their old life when something to happen to me, right? So I kind of figured this out that wouldn't be wanting to leave them with a debt, right? So I took this term insurance, which kind of covers, the home loan as well as some additional amount for my parents' old age or something like that. Yeah, so that is kind of important if you don't have someone who's earning on your as your backup, right? So if you also have someone taken a loan who might be a financial burden, like I said, if you have a EMI, etc., it makes sense for you to take a term insurance. And if you don't have the adequate savings, so some people are born affluent, let us say, better uh, financial conditions, and like, that of course, nothing is to back you up, or your let's say this way, your loss is of course not to be unseen, but money is not the biggest problem of those kind of families where uh, where it makes a lot of difference that you another 1 crore or a 50 lakhs would make a lot of difference. Yeah, so if you already have enough savings or backup plans, then you might even skip this part where your other stuff is going to take care of this thing. Yeah. So also if you're someone who have a certain liabilities to fulfill, like your children's wedding or a higher education or something, like then also it makes more sense for you to take a term insurance, right? So some newly married couple who are like has nobody else for themselves, they are like on their own, also makes sense. Yeah. So that being said, there are some term insurance calculating tools out there you would like to check out to figure out some plans and time saving processor which kind of helps you take an informed decisions whether or not this is a good option for you or which one is a good form or offer for you. That's all there in the internet. Do check that out. So, yeah, so that being said, let us conclude with before us doing how to buy a term insurance. It's like the easiest part. Go to any of the insurance, just fill out your details. They will, uh, in a funny note, they will kill you until you take a term insurance, right? So, kind of, they will keep on calling you, keep on sending you the text. That thanks to the digital marketing, the moment you search for something, it's all coming up, right? So decide and what's in your mind. Let the digital marketing guys do it for you. Fill up your details, compare different terms of insurance quotes, make sure don't just stick to any one, check out all your options and make that first premium amount payment, and then you are good to go. So that is all you need to know about term insurance. Do let me know if I missed anything. Do let me know if you want me to cover anything else on this concept. Otherwise, we will always come up with something new for our next day. Yeah. Thank you for very much for watching till the end. See you all tomorrow. Hit that subscribe button, share it with people who needs to learn about term insurance, etc. Yeah. See you all. Bye bye.